Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday, the 18th of October 2021, and we're producing our Monday morning gold and silver price update, forecast and daily news. This morning we can see lower gold prices, but higher silver prices. But there are concerns about the global economy due to even higher energy costs, and some ask what the ramifications for equity markets will be. We say they do not look good once the Biden infrastructure spend has been passed and implemented, as there will be little for those markets then to look forward to. So let's take a look. Welcome to Illuminati Silver. It's Monday, the 18th of October 2021. At 09:13 a.m. GMT +1. The weather today is squally. Yes, there are potential storms brewing here in the United Kingdom, or at least the part we're sitting in. The sky is grossly overcast, dull, huge, thick cloud, wind blowing. It's squally. And so too, according to the news this morning, is COVID. Because we could have a COVID storm about to brew. UK COVID surge sparks call for probe into Delta Plus mutation. Former US Food and Drugs Administration Commissioner Scott Gottlieb called for urgent research into a mutation of the Delta variant known as Delta Plus, following a surge in COVID-19 cases in the United Kingdom. We need urgent research to figure out if this Delta Plus is more transmissible, has partial immune evasion, Gottlieb said in a tweet. There's no clear indication that it's considerably more transmissible, but we should work to more quickly characterize these and other new variants. We have the tools. Gottlieb's comments come as the UK reported the highest daily jump in new cases on Sunday since mid-July, around when Prime Minister Boris Johnson authorised the removal of most COVID-related restrictions in what was dubbed Freedom Day. Weekly deaths from the virus have topped 800 for each of the past 6 weeks, higher than in the other major Western European nations, according to Bloomberg's coronavirus tracker. To date, the UK has recorded almost 140,000 COVID-related fatalities. Now, we won't focus any more, but what this is showing, at least, is that this virus is here to stay, in one form or another. The issue for governments and health services and businesses is how to deal with it without completely destroying our economy and fabric of life. Another headline this morning. Europe's industry risks demand destruction over price hikes. What's this all about? Well, Europe's industrial producers like BASF, SE and Yara International so far have managed to pass on soaring energy costs to customers, shielding their profits. There's a risk to that strategy. They could wipe out future sales. Most of the region's energy-intensive firms have either hedged against record electricity and gas prices, or are getting customers to cover to higher costs. While that's likely to see limited fallout for a slew of third-quarter company earnings due over the next 2 weeks, the question is how much longer buyers of chemicals, paper and metals products are willing to swallow price hikes. The biggest risk ahead is of demand destruction given the inflation wave passing through to the end consumer, said Peter Clark, a chemicals analyst at Societe Generale. Cratering sales could weigh on companies' pricing power and profit margins next year, he said. And this is why we produced a video over the weekend entitled Recession in 2022, derived from a Forbes article suggesting that that is what we're going to have next year, in part due to the energy crisis and the increasing costs. And this is why we are so carefully monitoring the equity markets, both in the US, in Europe, and of course in the UK, which is where we are based. You see, the equity markets are going to get another little boost from Biden's infrastructure package whenever that is launched. It'll be heavily watered down compared to the original 3+ trillion probably come in at around $1 trillion, but still sufficient to keep that market buoyant. But what is going to come next? Especially if we have rising costs of energy, which it looks like we are going to have for some time yet, firms either have to pass on those prices, thereby affecting potential demand, because people say, well, I'll delay purchase, where they can. Obviously, certain goods they can't do that with. And if they can't, then they're spending their household income on essentials, and therefore the other part of the market will suffer as a consequence. All of which will not prove positive for equities. It's not going to happen tomorrow, we believe, but it's there in the near future. Looking at Reuters today, a few headlines here. Again, Reuters seem totally fixated for some reason on China. Every day it's Evergrande. China's economy stumbles on power crunch, property woes. China's economy hit its slowest pace of growth in a year in the third quarter, hurt by power shortages, supply chain bottlenecks, and major wobbles in the property market, and raising pressure on policymakers to do more to prop up the faltering economy. You see a headline, Facebook plans to hire 10,000 in the European Union to build its metaverse. Finally, oil prices climb as COVID recovery, power generators stoke demand. Business news, UK. Ford to make electric car parts on Merseyside. It's investing £230 million, safeguarding 500 jobs. For those who may be unaware, but it was the policy aim of this government in the UK to basically turn all car production by 2030 to electric cars. Bank of England will act on prices, says the governor, and this will have an impact in the UK for sure. The Bank of England will have to act over rising inflation, Governor Andrew Bailey has warned, suggesting that UK interest rates may rise soon. However, he gave no indication of when the bank might increase rates from the current record low of 0.1%. The bank has already said UK inflation is set to exceed 4% before falling back as the economy recovers from COVID. But we've already seen today, as we've mentioned earlier, it looks like the new virus is taking hold. But Mr. Bailey said surging energy prices would push inflation higher for longer than previously thought. In the United States, UK ex-President Clinton has been discharged from hospital. A little comment on has COVID changed New York City nightlife forever? And Supreme Court asked to block Texas abortion ban. Dollar index back over 94, as we said it would, 94.06. Energy prices still rising, approximately between half and $1. Equity markets in the US, and we covered this in our weekly update, very positive in the United States on Friday. Overnight in Asia Pacific, apart from the Hang Seng Index, marginally down. UK and Europe this morning, down a reasonable amount, between half and 1%. No doubt, if the Governor of the Bank of England is talking about rates may have to rise. Now, in the United States today, you have three major pieces of economic news. Industrial production for September. That's going to be an interesting one. Capacity utilization rate. Okay, for those who go into the weeds, that's quite important. A lot of people don't really look at that. And the National Association of Home Builders Index for October. It'll be very interesting to see how these pan out. And then, as far as property is concerned, that's further supported on Tuesday with a beige book on Wednesday. It's only really Thursday and Friday. The flash PMIs, we have to say, they give us a good indication, but we would like to wait for the final PMIs before making any real economic decision. But it does give us an insight. So really this week, Thursday is probably the most important day. Gold prices, since opening, are down $2.69. We closed on Friday at 1767, or nearly 1768, and we're now at 1765. You can see gold initially dipped, then rose, nice recovery, and then dipped, recovered a bit, dipped, recovered a bit. But we have to admit this is only a few dollars. The chart does perhaps over-accentuate what's going on. Silver actually up 5 cents so far. A little more positive than gold. So silver's at 23.38. Cryptocurrency market again on a tear. We said by the end of this month we'll have a market cap of 2.5 trillion. We actually did touch it briefly over the weekend. It's now, as we're reporting this, 2.49 trillion. Going back to our videos of the weekend, just a reminder, we had our gold and silver weekly update, more or less repeated on Sunday with gold and silver prices retreat after strong retail sales report, but one we would urge you to look at. It's quite an interesting one, based on a Forbes article. Are we going to have a recession in 2022? That's it for now. The rain has now started to pour, so our weather this morning is not looking good at all. Please give us a thumbs up, subscribe, press the bell sign. Have a great day wherever you are. Until next time. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.